this framework with rule set A, I had an exit, but with my other trading framework, I'm still long. And that's conflicting, Patrick.
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers.
Okay, everybody, and welcome to another episode of Talking Trades with myself, Kevin Wadsworth, and my friend and business partner, Patrick Karim. So today we're going to talk about signals that you get in trading and how is it possible that you can get an exit and a hold signal at the same time, Pat? Exit and hold at the same time? Doesn't make sense. What's going on?
Yes, of course. And this is something we get often, like somebody's new to the investing world. What they're going to do is they're going to find somebody they trust, and then they'll say, okay, whatever he says, if he says buy, I'm going to buy ABC instrument, or in this case, I'll make the example of gold. Patrick said buy gold. Okay, fine. And then they buy gold. And then shortly after, they could hear us say, I'm exiting my gold position. Okay, I'm exiting my gold position, and they exit. And then after that, they ask us, well, what's your position? And then we, depending on what framework we're using, what rule set we're using, we might say, well, we're still long. And the guy said, hold on, Patrick, you told me you exited. Yeah, I exited based on this framework with rule set A, I had an exit. But with my other trading framework, I'm still long. And that's conflicting, Patrick. And it is not conflicting. It's these signals could coexist, and they do coexist. It's because in trading, many people can't. The beginners, they can't grasp this. Everything is defined by time frame. So either if I'm trading on the daily chart, whatever I do there, it's confined to the daily chart. So if I have a sell signal on a daily chart and I still have a buy signal on the monthly chart, both those signals are valid. But also, you can segregate those buys and sells by rule set, by trading framework. And I'm going to share my screen so I could give you guys some visuals on how that actually could play out. What we have, guys, is, I'll read this out loud for you guys. In trading gold or any other asset, you can get both an exit and a hold signal at the same time, and both can be valid. It all comes down to your rule set, just like I mentioned previously. So what looks like conflicting signals, it's because everything is time frame and strategy defined, right? Look, here right now, I have my classical TA rule set, all right? So classical TA, guys, it's all based on chart patterns, measured moves. There's a whole bunch of chart patterns here. Somebody maybe call this a bottoming pattern, inverse head and shoulders, a cup pattern, an arc. Well, right now I have the breakout. I have my move up out of it. I had a measured move that was overreached, and now I have this nice pull out of this base that created that first move. Now time moves on. I go sideways. Now I have another correction consolidation pattern. And once I get a breakout here, so here I have a buy signal. I think that was December 2023. I see the buy signal, and then I say, okay, what do I do with this? Well, what's my target? What am I going to do with a buy signal right here? Well, okay, using classical TA, I'm back in December here. I have a buy signal out of this correction consolidation phase. And I want to know, okay, well, using the classical TA rule set, what's my expectations, right? Where is going to be my profit limit? That means my exit. Where am I setting that up? Well, the pull leading to this flag pattern is added on top. So that's just the rule set. It's a guideline that energy in, sideways, overhead pressure, keeping that energy from continuing upwards. And once it's released, it explodes upwards. You could expect, sometimes it's a little bit less, sometimes it's more, but most of the time you should be able to reach that move A. So all you have to do now is add that move on top of that breakout line, and then you get your target. So right here, back in late December 2023, you could just sit back and relax and say, okay, whatever happens here, I'm going to exit at 3,000. So you set your profit limit. I'm going to get back to this and exit when it reaches my profit limit, no matter what the price does after, right? Because once you exit, whatever happens after, in classical TA, you don't care about it, right? You had a measured move. That was your game plan. Enter here, exit there, and that's it. So that's it. Somebody asks me, Patrick, are you long? I'll say, yes, I bought here. And then at 3,000, the price at 3,000, somebody asks me on that date, Patrick, are you still long? I'll say, no, I exited. So here's where the issue comes. Here I kept those annotations, guys, just for you to keep seeing the classical TA measure moves. But we have another system. We have a trend following system. We call it the trend navigator system on our website, but it's just a simple trend following system. So a trend actually is, you could define it by using moving averages in an objective way. The price here is trending above the 1 year moving average, above the 3 year moving average. And as soon I had a buy signal, like 1 month before the classical TA buy signal, I had a buy signal right there because the price closed above both my inclining moving averages. So I'm riding that trend as defined by those moving averages. And the sell signal, guess what? The sell signal will only be once I close below my shorter term rising moving average, that trend. I will only sell below that. So I'm entering pretty much close to where I bought using a classical TA, a little bit before, sometimes a little bit after. But look, the classical TA guys, they exit at 3,000. They didn't care about the trend. They just wanted their measure move. But it just happened, guys, that the price did keep going up. It just happened. It kept going up. It could have went down. It could have went sideways. Right now, it kept going up. And if somebody asked me, Patrick, are you still long? And I could also say, yeah, I'm still long. And that's how you avoid the conflict. Me, I'll tell them on the classical TA, I'm out. But if I would have entered based on the trend following system, I will only exit once I close below the rising blue line, that 12 period moving average. And that could be, we don't know how long that's going to be, right? You just wait, you wait. If the trend rides for 1 year, 2 years, 3 more years, I'm going to ride that thing until eventually closes. And that's how, guys, it's possible to be both long and be exited a trade on the same instrument, the same time frame, but everything is rule set defined.
Thanks for that, Pat. And of course, it really helps to explain why you can have a long-term position that you hold throughout a bull market, for example, adhering to those long-term signals, but you can also use a portion of your NAV to trade with. So your trades, you might be long in a bull market for 10 years, but if you're trading as well, you're going to get lots of buy and sell signals in that bull market. Within a Bitcoin bull market or within a gold or silver bull market, you get lots of sell signals on the daily and weekly time frames. So yeah, as Pat said, it's very much all time frame defined. Listen, guys, if you enjoyed that and you want to see more, don't forget to like, subscribe, and hit that notification bell, and we'll see you next time. Bye for now.